Many newcomers to the foreign exchange market are drawn in by a powerful idea. The Forex market is open 24 hours a day, 5 days a week. This suggests endless opportunity, a river of money that never stops flowing. You can trade when you wake up. You can trade on your lunch break. You can trade in the middle of the night. While this continuous operation is technically true, it hides a more complex and vital truth. The market is not always active. It has a secret rhythm, a pulse that beats stronger at certain times and fades to a quiet hum at others. Understanding this rhythm is one of the most fundamental skills a trader can learn. It separates those who chase the market from those who meet it at the right time. The reason Forex operates around the clock is simple. It is a global, decentralized market. There is no single physical exchange like the New York Stock Exchange for currencies. Instead, trading happens electronically between banks. Trading happens between corporations. Trading happens between individual traders all over the world. As one major financial center closes its business day, another across the globe is just opening its doors. This creates a seamless, continuous handoff from one region to the next. The trading day begins in Sydney, it moves to Tokyo, then passes to London, and finally, to New York, before starting all over again in Australia. To truly understand the market's rhythm, you must get to know the 4 main trading sessions. These are the periods when the vast majority of Forex transactions occur. Each session is named after the major financial hub that anchors it. They are the engines that drive currency movements throughout the day. The global trading day officially kicks off with the Sydney session. It opens around 5 p.m. Eastern Standard Time and closes at 2 a.m. Eastern Standard Time. As the first major market to open after the weekend, it can sometimes set the tone for the week ahead. However, it is generally the smallest and quietest of the 4 major sessions, with lower trading volumes overall. Next, the torch is passed to the Tokyo session, which opens at 7 p.m. Eastern Standard Time and closes at 4 a.m. Eastern Standard Time. As the financial capital of Asia, Tokyo brings significant volume to the market. The Japanese yen is the 3rd most traded currency in the world, so pairs involving the yen, such as US dollar to yen and euro to yen, see a lot of action during this time. Major economic data from Japan, China, Australia, and New Zealand is often released during these hours. This makes the Asian session a critical time for traders who focus on currencies from this dynamic and fast-growing region of the world. The Tokyo session defines the trading landscape before Europe even wakes up. As Asia winds down, the London session roars to life. It is the heavyweight champion of Forex trading. Opening at 3 a.m. Eastern Standard Time and closing at 12 p.m. Eastern Standard Time, the London session accounts for the largest portion of daily Forex volume. London sits at the geographic heart of the trading day, overlapping with the late Asian session. The most important times in the Forex market are not just during a single session, but when 2 sessions overlap. These are the golden hours for many traders. Trading volume peaks, liquidity peaks, more active traders from 2 major centers means more transactions, which leads to tighter spreads. Spreads are the difference between buy and sell prices. Tighter spreads lower trading costs, and these overlaps often produce the biggest price moves, creating clear profit opportunities. First, major overlap. Tokyo and London, 3 a.m. to 4 a.m. Eastern Standard Time. Shortest overlap, but still tradable. It bridges Asian markets and European markets. Early sentiment can carry over into the next session, often overshadowed by the next overlap. For traders awake in the Americas, it's a prelude. Volatility is a word you will hear constantly in trading. It simply refers to how much and how quickly prices move. A highly volatile market sees large price swings. A low volatility market is quiet and moves very little. Volatility ebbs and flows with the trading sessions. The London session is generally the most volatile, especially during its overlap with the New York session. That's when the market is most active. Big opportunity, big risk. The Asian session before London opens tends to be less volatile. It's often steadier and more contained. A crucial detail to remember: daylight saving time. Major countries, United States. Major countries, United Kingdom. Major countries, Australia. They adjust clocks forward in spring and back in fall, but they don't all change on the same dates. That can shift session open and close times by an hour. For a few weeks, the overlaps can change in March, April, October, November. A disciplined trader must track DST changes. Make sure your schedule stays aligned with the market's true rhythm. For beginners, this can feel overwhelming. Simplify it. First, pick 1 or 2 sessions that fit your life and style. Prefer high action in the Americas. London-New York overlap is ideal. Night owl, or in Asia. Focus on the Tokyo session. Don't try to trade 24/7. Master a focused 3 to 4 hour window when conditions favor your strategy. This reduces stress and improves decisions. Finally, habit. Know session times. Use a Forex session clock or a dedicated website. Set alarms for session opens, closes, and major news. Treat the market as predictable events, not a constant stream. Move from reactive to proactive. Learn to anticipate waves of volatility. Timing discipline is a simple step toward consistent success. Checklist item. Know my session times. Checklist item. Track DST changes. Checklist item. Choose my trading window.